Aubrey Chernick, the founder of the aforementioned ICOinvestor.tv and Security Token Academy. We have Andy Kyc from OTC Markets, and Kate Sills is joining us from the Tezos community. So let's start today. Oop, you all right? Cool. All right. So Aubrey, I want to start with you because you have a fascinating sort of background in terms of legitimate credibility as an entrepreneur, and you could have taken that success that you had in your life and done pretty much anything with it. But you focused on something most people have never heard of. What is it about this ICO, security tokens, all of this that is so interesting or attractive to you? What made you want to bring this knowledge to all of these people in the world beyond?
Sure, thanks, Adam. Well, in a heartbeat, I like rooting for entrepreneurs. There's about 600,000 startups in the United States every year, and sadly only about 3,000 of them get funded by angel investors, maybe 320 by Silicon Valley, so they're always looking for access to new capital. I had that situation when I tried to create my startup when I was 26, mainframe software, went to a banker in Toronto. He was in charge of mining and natural resources. He didn't appreciate software at all. So I know what it's like trying to raise money, from organizations that don't appreciate your vision. So the great thing about the last few years is there have been alternative sources to capital. Started with equity crowdfunding.
Right.
Then went on to ICOs. I heard China was shutting down ICOs as of last September. Got really excited. I did, because I thought this is a path to respectabilities. And so we did start ICO Investor TV back in October. But now security tokens, that's the next big thing. That's where it's going, more respectability. So I just think as this industry matures, regulated and advanced security tokens, that's definitely the way of the future.
Got it. So your thing is all about kind of helping people have access to capital that you didn't have the benefit of having. Is that right?
Exactly.
And whether it's in Kyrgyzstan or wherever, with this new age, this is what you see as possible.
Well, there is a worldwide phenomenon. Basically, obviously, if you look at the SEC regulations, it's focused on the United States.
Right.
So the issue of regulatory respectability, you might say, is mostly right now a U.S. phenomena. So when we're taking a look right now at STO security token offerings, that respectability, that's really a U.S. phenomena. There's maybe 20 other countries through their regulatory journey are trying to figure out what's called KYC, AML aspects of cross-border trading. So right now we're focused a little bit more on ICOs or STOs in the U.S. using regulatory exemptions in terms of their offering.
Right, great. So there's something called the Howey Test. Has anyone heard of the Howey Test? Okay, so the Howey Test is, and I'm not an attorney, I guess I should say that for some reason, but the Howey Test is sort of the best we have to go on right now about what is and isn't a security. Check me if I'm wrong. Anybody and any attorney in the house, just stand up and shout at me. It comes from around, I think it was 1946. And what it said was that something is a security if it includes, I'm not reading, this is entirely from memory, expectations of profits from a common enterprise, and it depends solely on the efforts of a third party. So if you're investing in something that fits those three boxes, you can pretty much expect that it is a security. I wanted to say that as a way of a filter to listen to what we're saying through the next 28 minutes, let's say. So bearing in mind, it's utility versus security. The Howey Test is sort of the best thing we have to go on until they make something better. Now, Andy, you have some pretty interesting observations about this application of the Howey Test to the question of utility versus security. It might not be that simple.
No, it's not. OTC Markets trades legal securities through regulated broker-dealers. So I come from the traditional model of capital markets. And if you look at 85 years of regulatory oversight by the SEC, their main interest has been to protect the public interest and prevent fraud. So what is the basis of the security? How do you create compliance, verification of third parties, firm obligations to meet quote requirements, audit trails of those participants you're trading with? And I think that all these rules have come into place from the quality of data that has come about. So how do you, if you look at the value chain, nothing has changed in the trading environment. You can price an asset and you can trade an asset. But when you step in between that, how can you go out and market the asset, okay? Can I market it to a widowed grandmother, okay? Which is generally the term used, which means she might not understand to buy it. Let me put it into the other side is, what do you do, how do you feel the next morning when you've invested $10,000 into a crypto asset to find that it's been hacked and you have $0? Do you turn to your wife and say, honey, I just lost $10,000? You know, you see blood, you want rescission risk, you want to sue somebody. And I think that the infrastructure of the securities industry has built a lot of these factors into play. And I want you to take a step back and just think, what's the risk, how do you price the risk, and how do you transfer the asset to buyer, from buyer to seller in a safe mechanism? And I think that those have kind of pretty well been standardized.
Yeah, for sure. And so from the past till now, we have here in the US at least something called the Securities and Exchange Commission, which is sort of the epitome of a centralized regulator. So Kate, you and I would say probably, I'm going to guess, the whole Tezos community would probably agree that maybe there's even another way. It's not as cut and dry as the only way to govern the behavior of actors is through a centralized regulator. What's another way?
Sure. So my parents are organic farmers, and I think the California Certified Organic Farmer Association shows a good way to go about it. So at the very beginning, in the 80s and the 90s, the farmers actually were able to audit each other. And so I think, you know, that's an example of a voluntary kind of regulatory system, where at the end of it, you might have the FDA, but when it comes to people who know the industry best and who can actually, you know what's actually a good thing and a bad thing, the people themselves might be the best to do that. So I think that's just another perspective, and the industry is in its infancy, and we'll have to see what happens.
Yeah, so now sticking with Tezos for a minute, there's a ton of talk about security tokens because a lot of reasons. We've had, regulatory memos sent, there's been subpoenas and all these things, and people have freaked out, so maybe we should all be in security tokens. But Tezos did pretty good, promoting what we would all call utility tokens, right? And can you talk a little bit about what you guys do, maybe some use cases?
Sure. So Tezos is a blockchain and smart contracts platform similar to Ethereum. So we had a white paper out in 2014, and the tokens that we have are used to power the security of the blockchain, to power smart contracts and things like that. And I think there are a lot of really interesting use cases that are being built. So for instance, one thing that the early advocates of the internet were trying to do was to have online dispute resolution. But before we had blockchains, we had no way of actually enforcing any of that. So there was a organization called the Virtual Magistrate that some law professors put together in the early 90s. And they had a couple of cases, but they had to stop because no one was actually listening to what they were saying. There was no one could afford damages. So with digital currencies, we can actually do that now. And I think that's one of the really exciting use cases. Another is property title on a blockchain. So this is just using a token as if it were a deed to be able to enable secure transfer of property title.
Yeah, and then some people can get confused around that, or let's not, maybe confuse is too strong a word, but wonder around that. If it's a token, and we're talking about real estate, if you're going to buy or sell a house, isn't that me buying something that's hoping for future gain? And does that then, are we not a utility anymore? Do you have a thought on that?
Yeah, so I think, again, I'm not a lawyer, I'm not a legal scholar, but I think if you look at the people who are, there's a law professor named Joshua Fairfield, who has a paper called Bit Property on this, and he advocates for the use of a token, like a non-fungible token, similar to the ERC 721 standard, I believe, to be used as a deed, basically, for property title. So there's no expectation of gains, it's just representing ownership of property.
Yeah, so this is where, if things aren't already confusing enough in this world, which, take it from me, they are, when we talk about the non-fungible token, you want to dive into that a little bit because that addresses some of the other things that I know Andy's talked about what is a commodity, how is this all going to be regulated? What does a non-fungible token mean?
Sure, so I think the best thing to compare it to is the ERC 20 tokens, which are fungible. And fungibility just means that it's indistinguishable from another version of it. So like cash, for instance, is fungible, right? Like $20, a certain bill is no different than any other bill in terms of its usability, right? But a non-fungible token can be used to identify like a specific asset. So CryptoKitties, for instance, are a good example of this that people might know of. It's kind of a toy right now, but I think it's a really good example of what could be possible to be used to, have a token to identify famous art pieces or other kinds of property.
Yeah, and so I know one of the use cases that people often complain about is, well, what about my Pokemon cards? Is that a security? Because I might sell it for future gain, and maybe it's a non-fungible token. And I think there's not, it sounds so dopey, but I don't think there's clarity around that. So, Andy, what do you think? I know we had talked about sort of the gray area between straight securities and commodities and the SEC and who governs what, and what's the situation there?
So, last week, Commissioner Clayton from the SEC announced that, is it a security or can it be a commodity? And if it's a commodity, it'll be regulated by the CFTC. So I think what you're starting to see is that in the last few years, the SEC has really gone into online public offerings, Regulation A. They've really modified their stance. They've really looked forward into kind of creating a way where this can be an asset. And in terms of how that asset can be owned, traded, and held, your traditional problem with equity securities has always been how do you buy it, trade it, custodize it, and clear it, and put it into your E-Trade account. Well, if I look at, we worked with the Grayscale team to create GBTC. So GBTC is the Bitcoin Investment Trust. So in 2013, the fund raised money through private investors. And then once the legal restrictions were lifted from that, they wanted to have a public market so they can have a repatriation of that capital. So we work with Grayscale to establish and create a what I would call a grantor's trust, which gives you exposure to that asset without having to hold it. And what it's interesting is that it's traded at a fraction of the cost of what Bitcoin is. There's some fees involved with it, but it's the only way that we can find a way to give you clean exposure. There's 4 or 5 other products that are coming to market right now, which will tag along to different currencies. So now I'm starting to see the investment community look at it in a way where it can be consumable, depositable, tradable, and clearable as a security, but still have exposure to the asset. It's no different than if you want to buy gold. You can buy a brick of gold, or you can buy the exchange-traded fund GLD and have exposure to that at a fraction of the cost. So we're starting to see fund-to-fund interests. We're starting to see all kinds of other questions that have come up in the last few days about how can we create a security for the transfer of asset in a regulatory environment, because it's all based on consistent information, updates, verification, and if you look at ongoing verification and reporting, companies report quarterly for a reason. You want to know what the update is. You want to know if they bought or sold an asset. You want to know how much of it is. You want to know what their auditing is. And these are no different than the decisions we have to make in daily living. So we've put a process around it that can be easily consumable in today's environment.
Right. So those are all evolutions that really help the investor, which is, of course, what the SEC is built to do and what sort of the centralized institutions are built to support, which is a totally noble mission. But now we have these security tokens and security token offerings. Aubrey, you sit in this sort of unusually informed place by hearing all of the leaders and all these communities kind of talk to us about what they're doing, how they're doing it, and why they're doing it. The security token itself offers a lot of new promise for issuers. What's so important about a security token? Why is that exciting enough to start a security token academy? What's the promise there?
Sure. So we get opinions, I said, from meetups, experts. Everyone wants to hear about the next big thing, but from credible voices. So to find the experts on security tokens, have them speak is one of our missions. So what's special about security tokens? Why is it there? There's 2 primary drivers. One is obvious: the regulatory pressure. It started last summer, last fall. The Dow report ramped up this spring in terms of more regulatory action, subpoenas, et cetera. And so by and large, the industry is saying, and regulators are saying, that most of the tokens out there are probably going to be in the United States, fall under some regulatory regime. Not all of them, but most of them, et cetera. So that's obviously one area. And one of the really confusing things in this area is language. What is a security token? There are 2 definitions, but you're not really going to come across these two unless you come to the Security Token Academy. One definition is a definition used by a certain set of people that says security tokens are simply ICOs or STOs or ICOs that are regulated. By that point of view, some of the $5.6 billion that was raised last year are security tokens because they used a Reg D exemption or something like that. So regulatory drivers is one aspect that drives what we call the Security Token 1.0, early stage of security token that's built on a smart contract like an ERC-20 type of foundation. There's a second driver underneath security tokens that involves a little bit more technology, KYC, AML, et cetera. These drivers, people would argue, have the following benefits. Improved efficiency, so instead of having pieces of paper, they're going to be digital, representations. Secondly, increased speed. That's important if you can improve or decrease the settlement time from T+2 to T0, same day. Some people would argue there's less time for naked short selling, in that process. But the primary benefit that people don't talk about enough is really the improvement of liquidity, especially in cross-border investment, et cetera. So these drivers, some regulatory that started before, plus the drivers that improve cross-border, liquidity by increased what's called cross-border identity management through KYC and AML. That's why this is becoming exciting. And that's why in 2018, I've said before that I believe we're going to see the birth of the security token industry in 2018.
Yeah, okay, so you covered a ton right there. So since I don't know kind of where everybody sits on the understanding of a lot of the stuff that he was mentioning, let's bust out a couple of the things. You had talked about KYC and AML. Just in case people don't know what that is and why that's important, what do those stand for?
Sure, so when you have, over the last 5 or 10 years, international trading or money transfers, for some reason, governments are more concerned about know your customer, KYC, often validated through a passport. I learned recently, just last week, in September, a lot of money left China for Japan. But now Japan themselves are looking at the KYC regulations. So each of the countries, 20, 30 countries around the world, are starting to look at the KYC level of identification and AML, anti-money laundering. Okay, so if you want to have foreign investment flow in, and that's important if you want to improve the liquidity or the pricing, there's a barrier. The barrier is administrative cost and hassle. Yes, if you have an issue, an offering you're trying to have in the US, that's okay. Maybe you could do 1 or 2 extra countries. But for each country you want to go into, you have to have manual administrative processes to set up KYC and AML identification. In other words, it doesn't become viable after a certain number of countries to really have a global type of offering. So the new technology, which people would say is a layer on top of on top of, say, a smart contract, such as the ERC-20, that new layer will allow the codification of KYC and AML or identity management, allow that codification on a global basis for those participating countries. And that means for whatever countries you whitelist or approve your offering, it's going to make it more viable for those international investors to invest in your US offering through probably a Reg S for international than you could have otherwise done. This is really big because it really opens up more of a global market to invest in US types of offerings.
In a compliant way. That's the key.
In a compliant way,
right.
in a compliant way. And there's a lot of people around the world that would like to invest in America, whether it's the Empire State Building, iconically, or whether it's flight capital. They have money tied up in other countries. They want to, efficiently go to another country, or sometimes people want to move to the US through an EB-5 visa. They put in maybe $500,000, et cetera. So there's a lot of motivation why there's people that may want to invest and maybe even pay a premium for your building, for your company outside the US. But these new layers of security tokens are really going to allow them and enable them to invest in your precious dream or asset.
Yeah, amazing. So you threw in something there that I think is important. You said like the Empire State Building. You're just like, oh, the Empire State Building. So that's, I think, another one of the amazing promises of securitization. And it's the opportunity to fractionalize assets globally, right? What do you think about that, Andy?
Well, I think that one of the things we're talking about is best practices, corporate governance to create a standard.
Mm-hmm.
We're talking about, how do you centralize pricing? How do you actually create that? If you fractionalize ownership, there's a mechanism to do that today. If I want to own a piece of something, and there's an asset that I can afford to buy, how can I get it, secure it, and hold it, right? And I think it's a great idea because you have fractional ownership in many aspects of our daily living, you know? Real estate is one example. I mean, you know, coming back to corporate governance, which, you know, sounds like a real legal term, but really it's best practices, you know? If I trade with you and you screw me, I want to get revenge, right? But the reality is that how do I ensure that the participant I'm talking to, when you talk about anti-money laundering and KYC, this creates a standard. And I think what we've seen from where I sit is that there's been a real good history of creating best practices, and it just happens to be in the legal securities enterprise. Now you're trying to take these aspects and kind of, how do I interact with different currencies, different tokens? How do I actually implement that process so I can protect the buyer and the seller and have it smart? You and I were talking earlier about corporate governance. You said you were fascinated by that. You know, you're talking about the food industry, you know, creating a standard. Third-party verification, independent third-party verification to validate the transaction. You know, you think about research, for example, corporate research. If I want to buy research, somebody will write about it. If I pay you with my security, I influence your research, so I have to pay you with cash because it makes, you know, it creates a conflict of interest. How do you prevent all these things from happening in this market? So fractional ownership is a great way to get exposure to an asset. And, you know, the other part is that on the asset, you have to have good corporate disclosure to create a good basis for analyzing, valuing, and trading that asset. So you need all these aspects. So we're kind of talking about a similar process of best practices. We're just applying it to a different asset class.
Yeah.
So Adam, I
Yep.
could mention, so what Andy said is really important because the U.S. really has a lot of maturity in refining these best practices and standards among the U.S. trading participants, et cetera. The challenge is internationally, you have all these different laws and regulations. And when countries agree on the same law, legally that's called harmonization of laws. But right now, each country is really conflicted. And they're conflicted because, on the one hand, a lot of them would like to shut down the whole crypto movement because they're printing money, they have their national banks, they just want it shut down. But on the other hand, they don't want to miss the boat again. They're insanely jealous of Silicon Valley and America and another internet. So part of these countries, they want to make sure they don't miss the boat on whatever this next crypto thing is going to be, whether it's security tokens, fractionalization, Bitcoin, et cetera. So they're all going through this, what I call regulatory journey. And so right now, the challenge that we have is the US may have standardized processes and best practices, but around the world, we have to slowly see over the next several years how worldwide efforts to standardize KYC, AML, and other types of mechanisms will be standardized from a regulatory, legal point of view, and then from a technical infrastructure view. So that's the problem right now. It's cross-border investment, cross-border harmonization, and standardization.
So Aubrey, just in a quick add to that, in the 90s, I'm a little older than many of you out there, they were privatizing international assets like telephone companies around the world. And the U.S. holds half of the world's assets. And for the bankers who were trying to privatize those assets, the American investors demanded things like independent audit committees, compensation committees. They wanted a lot of corporate governance practices put in place that if they bought that asset, they wouldn't get nicked, okay? And that created a standard. So we saw in the 90s, many stock exchanges around the world had different corporate governance standards. And I think that in unifying a simple plan for doing KYC AML, you standardize that. And that becomes the gold standard for if you want to buy this asset, you need to comply with these certain processes and regulations. And there's a lot of international laws, and you can invest in foreign markets. So I think that, again, this is just a regurgitation, a new approach to putting a really good process in place to buying an asset and pricing that risk.
Got it. Okay, so we have come to the end of our lightning round, but before we go, I just want to get some predictions from you guys about the coming year. You know, security tokens, security token offerings, STOs, I don't know what we're going to call them, but is that just going to overtake and wipe out what we've been calling ICOs for some of the reasons that we're talking about? Or are they going to become side-by-side things that happen in harmony? Are they going to be in conflict? What do you think, Kate?
So I think it's really hard to say. I will say that I think the entire landscape is going to change drastically. If you look at what the early internet advocates of the 90s thought was going to happen, They thought they were going to have digital cash very quickly, and they thought that was going to be something that was going to drastically change the world. But they ended up not having that, and so the internet became kind of like just a source of information, right? You can Google things faster, you can buy things on Amazon, but you don't have the world-changing aspects that they imagined. But I think we'll see that in the next couple of years or so. There's going to be some huge changes that are going to change the landscape entirely.
Okay, I like it. Any predictions around whether they'll come more in the form of an ICO versus an STO? Are utility tokens here to stay, or are we going to see them wither and die on the vine?
Here to stay. We're going to see a lot new products coming to market in consumable ways. I mean, I can't tell you how many questions I've gotten over the last 6 months about, what asset class can I trade in a market because I need to raise capital, or I need to repatriate capital. So I need to have an opportunity to do that. So I expect many.
Do you think it'll be side by side? People do both?
Innovation of products is going to come. It might, I think that the leading securities that'll come now is some derivative product. I couldn't predict which one would be, but
Love it.
I don't want to put my neck on the line.
Aubrey, what do you think?
Well, when we started the Security Token Academy, say 2 months ago, we didn't know the arc of where ICOs were going to go versus STOs are going to go, but we've had a lot of interviews, a lot of predictions that we've had people talk about. I think it's pretty clear where it's going is ICOs are probably going to be replaced by STOs. Question is when. Some people say 2018, 19, 20, somewhere in here it's going to be replaced. The big, I guess, item for 2018 in terms of security tokens is the launch of the security token trading organizations, exchanges, not cryptocurrency exchanges, security token trading exchanges, and ATSs, 2 different types. T0, for example, is an ATS, alternative trading system, et cetera. Why are these going to come into the marketplace now or into this fall? Because last year, the $5.6 billion that was raised in ICOs, much of that, at least in the US, was through Regulation D. Regulation D has a 12-month lockup. Those 12-month lockups are going to expire when? Mostly this summer and fall, because that's when most of the activity occurred. So therefore, it makes sense for security token exchanges and trading organizations to come into the fall this summer, later this fall, which is why we're having this conference in New York on June 11th to talk about how security token trading organizations are going to take on and maybe take over Wall Street.
Awesome. So if you're in New York, join us there. Thank you, panel. Thank you, everybody, for listening. Hope that gave some color to utility versus security tokens.